All right. What's up, everyone? How is everyone doing? What's up, Trader MB? Great to see you here. Hope you're feeling better. I'm doing better. You can probably still hear my voice. I'm a little bit ill. So, but I'm doing way better than I did on the previous days, for sure. Thank you for asking as well. Thank you for asking. Ooh, that's a beautiful name. Samuel. I'm going to call you Samuel. Thank you for asking. How is everyone doing? What's up, Adnan? What's up, Noel? What's up, Alfredo? What's up, Thompson? What's up, Dave Jones? Sunday studying, you know it. Come on. Let's outwork the others on Sunday, and then we will have a beautiful life. What about that? What's up, SK? What's up? What's up? What's up? What's up, Mehdi? What's up, Kim? How are you? All right, perfect. On time, perfect on time. You are perfectly on time. All right. So today I wanted first a little bit touch a little bit on drawn liquidity and maybe go a little bit more in depth on what we talked about in the A to Z guide and the insights I gave in there. And I think a lot of people missed it, but I actually gave you a drawn liquidity, and in itself the most recent one, so the flood and the lot video, the first line of defense and the last line of defense video, that is already a drawn liquidity, that is already a trading plan, that is already everything you need. And of course it's very easy for me to say because I've already seen a lot more stuff, but the A to Z guide is not finished yet, and we basically closed off the first chapter of the A to Z guide just now, and now we will touch on market structure as well and dive a little more in depth, and that way it will become even easier. But there's a few things I wanted to touch on in the most recent video that I uploaded. How you doing, Duffy? Welcome. Great to hear. A new family member. That's how I view it. Appreciate the value you bring out. Hey, no worries, Trade MB. It's my pleasure. I hope you get better soon. Thank you, sir. Thank you. Yeah, as you can probably tell, my brain is a little bit fried as well when I'm ill. So I'm not that focused, etc. And that's also important, right? If you are ill or you are not at your best, you are not at your prime, then don't even start trading. That's very important. So this week, especially on Thursday and Friday, I believe, I took the day off and didn't trade, etc. Of course, I still helped in the mentorship, etc. But I wasn't trading personally myself because I'm just not that focused. My brain is a little bit fried. I need to first get a foundation right, and then we can focus on getting better again. Perfect. Perfect. Great to hear the video on rejection block. Great to hear. All right, let's get into it. So I always refer back to this example right here. And this is just such a beautiful example on a DAX right here. So that is GER 40. And right here, what is your first line of defense on the monthly? We had this fair value gap. Now, like we mentioned in the flood video, first line of defense, fair value gap, is usually the case. But again, I like to have fair value gaps that are overlapping with something else. So in this case, we have an order block sitting right there. We take the wick, of course, because it is overlapping with fair value gap. So we take the wick right there. Then for the monthly, you need to understand that this is already your drawn liquidity. That's it, done. There's no fancy thing. This is already your drawn liquidity. And the thing is we right here got to a drawn liquidity because we know, all right, we have fair value gap here. There is nothing to rebalance on this side. So whenever there's nothing to rebalance, aka there's no fair value gap, there's no any sort of gap, then price is likely taking liquidity. So right here we have liquidity. Beautiful. So that is already your drawn liquidity. And now the most beautiful part is we have done this on a monthly. So imagine how many hours we can spend towards trading, towards that drawn liquidity. We have 1 month, the second month, the third month. Beautiful. And that's absolutely insane, right? And then if we drop down into the weekly even, weekly needs to be in context of the monthly. And then right here, everything is in context of the monthly. So all these weeks are will be looking for longs, essentially. So if we drop into the 4 hour right there, and specifically the order block right there, and you can see the fair value gap, yes, it gets some sort of rejection right there, but you will get a bit confused when you just have a big fair value gap right there and not refined in a way. And right here, this is where a lot of people will go wrong as well, and not specifically wrong, but a lot of people take the 2022 model. I always advise, if you are a bit more a beginner, not in a rude way, but everyone starts somewhere. So try to wait for more price action. Be patient for more price action and enter maybe as late as you can. And that's the best advice I can give you on that, on an entry pattern, because right here you can see the first entry pattern is usually, it tends to fail a lot. So right here we have the sweep, obviously. Then we are exploding higher. Then this is a breaker, right? That right there is a breaker. Then in this leg we have a lot of price action, and it is very high up. So the first line of defense would be this. Now again, if you want to enter over there, that is perfectly fine, but just keep in mind it can still come below that fair value gap, and then potentially even into that breaker and this fair value gap. The last line of defense, what would be the last line of defense? That would be the last line of defense. So you wouldn't expect this low to get violated. And as well, when there is a fair value gap in the leg, and this is what I've made a video on before as well, and a Twitter post, when there is a fair value gap in the leg, so fair value gap right here, fair value gap right here, we don't expect a low to get violated or even traded below. Of course, this can happen, and sometimes it will happen, but generally this low will not be traded so will not be swept and then continue higher when there is a fair value gap in the leg. When there isn't a fair value gap in the leg, then you can expect that low to get swept. It's a high probability to get swept eventually. All right, so right here, if we are going higher, where are we likely going higher from? Well, we have this breaker. Obviously, time, etc. has to agree as well. So right here, we are coming into it at London session, I believe, right here on a Friday. All right, perfect. We might cap the week there on Friday. Then on the 5 minutes, where is it? Let me see. All right, perfect. Right here. Then on the 5 minute, we are now coming into that 4 hour breaker. We have no fair value gap in the leg right here, aka we have no displacement just yet in that leg. All right, perfectly fine. We just wait. We have some sort of patience, right? All right, we have a fair value gap right there in the leg. What does this become? That was a mitigation block, right? Why is that a mitigation block? Well, because it failed to take out this swing low. So this is swing failure. So then that becomes a mitigation block. So then right there, we have not traded back into any sort of discount array just yet. And that is important to understand. We have not traded into any sort of discount array just yet. Then we have this gap that is overlapping with that mitigation block. That mitigation block is our first line of defense. Then right there, we also have a fair value gap with the gap. In this case, just that is your whole gap in a sense, with the overlapping mitigation block. So this leg up right there is a bit tricky. Why is it tricky? Well, the only reason it's tricky because this low is not coming off of any discount array. And that is very crucial to understand. Very crucial for you to understand. And right here, yes, you have, and right here, this could be your entry, right? don't get me wrong, this could be your entry, but just you need to keep in mind that this didn't come off any discount array. So this could still get swept into the discount array that was there. So if you were to enter right there, just be careful with your stop loss. And again, I always like to tell people, just get in. In a sense that reward yourself, that you had the patience to sit there and wait for the entry. And then sometimes people tend to suffocate their stop loss, as in they want the best RR, so they are now placing their stop loss there, they get taken out, and price moves inside the intended direction. And you're not rewarding yourself. This is only detrimental to yourself. And of course, RR is great, but in the long run, that RR, when you have a 2RR, a 3RR, that is perfectly fine. That is more than enough. And especially when your win rate, because when you do this, your win rate will be absolutely insane over time, and when you stick to the same things. So that is something to think about, right? Just reward yourself when you've been sitting all day right here and you see price in the 4-hour breaker, you've waited for it to come into a monthly order block, and now you're waiting for a 5-minute market structure shift, a fair value gap, a displacement, and now you're not getting in because you want the best RR and you want to essentially be greedy. You need to reward yourself, and that is very important. So just when and again, put it into perspective, right? Because we just got to a monthly drawn liquidity. We got to a monthly drawn liquidity, and you're stressing over a few points right here because you're like, oh shit, come on, man. I need those extra few points. Come on. No, just you could even put it here because you're targeting something on a monthly. So because you are targeting something on a monthly, look at how much you can target. Where was the monthly? All that line is your monthly target. Huh? This is really live. Yes, this is really live. It's another video replay. I'm really live. I'm really sitting here inside my office talking to you. Yes, it's really live. So I hope that makes sense, right? Don't suffocate your stop loss. Give it some room. Reward yourself, essentially. And so right here, not coming off a discount rate, this could still get swept. Then we see, again, first line of defense, the mitigation block overlapping with that fair value gap. Perfect. Then right here, we have a new displacement away. That is your first line of defense. And again, we have that fair value gap, first line of defense. Then we have that BPR. Then that low is your last line of defense. Then let's dive a little bit more deeper. We have a new leg up, no fair value gap in the leg up. Keep that in mind. New leg up, fair value gap in the leg. Ooh, perfect. First line of defense. Right there. What is overlapping? Order block. Voila. Then right here, we sting a little bit deeper into the fair value gap. And again, that's something to take into account as well, right? When there is two fair value gaps in the leg, yes, it can sting into this lower one. All right, perfect. But it still ends up going higher perfectly. So last line of defense right here, that swing low. Then right here, we have new fair value gap in the leg, last line of defense, first line of defense right there. Does it come into that order block? I don't believe so, right? No, it doesn't. So it comes into this fair value gap, then continues higher. All right, perfect. Maybe not an entry opportunity inside that. Then we have new fair value gap in the leg right there. Last line of defense, your first line of defense, overlapping with what? An order block right there. Then new fair value gap in the leg right there. What is your last line of defense now? And this can go on and 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 on. This can go on a lot of times. Can you discuss the kill zones for this price action? Yeah, sure. So actually, I'll give you a little bit more insight into time and into news. Kill zones, and it might be a little bit shocking, kill zones are not that relevant to me. And I'll tell you what's more relevant. News drivers are more relevant than kill zones. So whenever you're looking at a day to trade, focus on the day that has news. And I won't dive too deep into it right now. What's up, Sifa? How are you doing? But kill zones are nice, and yes, they are sessions where you can trade, etc. Yes, some moves might happen in the session, but focus on the day where the news is. That is very important for you to understand. And then the kill zones, etc. will make more sense eventually. So right here, we already got to a drawn liquidity, and you need to understand, right? I didn't form a bias on the 5 minute here. No, I got my bias, etc. from the monthly and the 4 hour. And because we had our drawn liquidity on the monthly, we already knew what we wanted to see on the 4 hour. We already knew what we wanted to see on the 5 minute. Ooh, it's beautiful, right? It's beautiful. I hope it makes sense, because if you pair this with the most recent A to Z guide video, so that is the flood and the lot video, the PDRA matrix, then that first line of defense and that last line of defense, that is already your drawn liquidity. That could be a trading plan in itself. Yes, it really could be. Of course, we will dive into it deeper in the A to Z guide as well. Don't worry, it will become even easier. All right, let's answer some questions. I won't do it too long, because as you can probably hear, I'm still a bit ill. I need some rest, and I'm potentially becoming an uncle today. So how exciting is that? How exciting is that? That is pretty crazy, right? I'm just scrolling through the chat right now to see if there are any questions. Let's see. Bro, do you know about smart prop traders? Is it legit? Oh man, all the prop firms out there. All the prop firms. I'm not sure, to be honest, bro. I'm really not sure. I would stick to the usual. So stick to FTMO, maybe not even FTMO anymore. FTMO is lacking. FTMO is not competing at all. I don't know what's happening, but it's a bit of a shame, right? The OG of the prop firm space, and they are lacking. But maybe my funded FX, stick to them. I would say funded engineer has a coupon code, a discount, I believe. So that's interesting as well. Maybe. Good afternoon. I can't stay because family matters. I just want to say, hey, what's up, brother? No worries. Family first, always. No worries. You can watch it later, like you said, right? Thanks for no worries. Take care, brother. Hope everything is alright. G just discovered your videos this weekend. Head off. Hey, love, brother. Love, Tom. Thank you. Appreciate it a lot. Was waiting all week for this. Hey, what's up, Zinu? How are you doing, brother? I see more clear to me. Love to hear that. Love it. Silver Bullet, let's go. In the house. What's up, Foster? How are you doing, brother? How are you doing? Great to see you again. Time sessions, please. Time session, yeah. So the kill zones, and again, I said it in the previous videos as well, or live stream, I'm not sure which one. But the kill zones, I like to focus on London. And if you are maybe a bit more of a beginner, maybe you should focus on New York, because London generally makes the high of low of the day, of course, in the right circumstances, when you combine it with first line of defense, last line of defense. Then if we come into some sort of PDRA where, let me see if I can actually find an example. Then we had an example in EU, I believe. Right? We had this. Into that fair value gap. When you combine price right there with the kill zones, then I think this was London, yeah. Let's say London made the high of the day, then New York will be a retracement. So if you are just starting out, maybe focus on New York only, because it will generally be a little bit easier to navigate, because you already have something to work with on London. And it's the same for if you are just starting out, maybe not start trading on Monday and start trading on Wednesday, because then you likely already have the high or the low of the week already set in, and then you can just follow the trend, if that makes sense. And that goes the same for every time frame. Time and price, yeah. Why times becomes for the price? Well, essentially, it's a great question as well, but Well, let's put it this way, right? We need time always to agree with price. So yes, there can be price, but on its own, it's not that interesting. Yes, there can be time, but on its own, it's also not that interesting. We need them to be moving in harmony. And like I just mentioned as well, the new drivers are also a factor of time. So the new drivers, when they are agreeing with current price action, you will see unbelievable results. So, oh, that makes sense. Let me see. Oh, there's a lot of stuff. Congrats. Hey, thank you. Thank you. There's a lot of stuff. I'm sorry if I'm missing something, but again, we will do more live streams. So don't worry. You're always welcome to repeat your question in another live stream. Please don't spam it. But I will go over them eventually. MFF is also lacking. Yeah, facts. That's true. And my Forex funds, I don't like my Forex funds because when you're trading indices, you have 100 lot, or in general, even as well for Forex on my funded, what is it? I forgot the name. There's so many platforms. I just literally forgot the name, but MFF is the abbreviation, and you have 100 lot size limit, so you have to put it in multiple times. It's absolutely horrible. And their marketing for MFF is absolutely shit. I do have to say, like the YouTube videos and stuff, come on, you can do better. Yeah, for sure. Like a child is the best thing in life. It's incredible, right? It's incredible. It makes you realize how how crazy the world is. But yeah. With which ICT mentorship should I start? I would say core content, but if you're an actual beginner, then core content will not make any sense and it will be very difficult to navigate. So if you're an actual beginner, start at babypips.com and then maybe combine it with the core content or even the Market Maker Primer series. That's also pretty basic. Thank you. I can't pronounce your name, but good evening. Thank you for being here. Did you trade Silver Bullet? Yes, I do sometimes trade Silver Bullet. I actually took a trade on EU. What was it? It was on Thursday last week. Let me see if I can find it for you, my friend. What was it? I believe it was this. This was my entry, and it was a little bit higher because I got lucky with my fill, and absolutely beautiful. So that is essentially your Silver Bullet, right? It is the last. Of course, we can't always know when the last entry opportunity before we take Terminus. Terminus is drawn liquidity, and right here is the drawn liquidity. That low would be your short-term drawn liquidity. Then we can't always know when it is the last entry, but this was one of the last entries right there. And you can see how it's the most volatile one. So it's a slight retracement. It usually doesn't like to take any liquidity out. So it's just a retracement and then a boom, instant move to your take profit, hopefully, of course. And we actually on EU as well, we got to our destination. We have arrived right here to the draw on liquidity. We mentioned, I don't know when, but we mentioned it right there. So that is interesting. Again, I don't think this is the bottom for EU just yet. We came into that draw liquidity, but it is something to be a little bit careful about, right? Be a little bit mindful that we have been expanding for a few weeks right now. Of course, not trying to call a bottom. That is also very important. Not trying to call a bottom, but be mindful. We have been expanding for 3 weeks. And do you recall an ICT video when to avoid a London session? After 3 days of expansions, that is usually when you avoid a London session. This is fractal, of course. The market is fractal. So after 3 weeks of expansion, just be mindful that you aren't chasing price essentially, and just be careful for that. Of course, it can continue lower, but just be careful for that. And what you'll see a lot of the times is you have 1, 2, 3 down candle, 1, 2, 3, down candle. 1, 2, 3, sorry, 1, 2. I miscounted. 1, 2, up candle. 1, up candle. 1, 2, down candle. Price moves in expansion to consolidation, consolidation to expansion. So be careful of that. Be careful that you aren't chasing price. I need a little bit more price action right now to work with and to get to drawn liquidity. I do think on the dollar, if we take a look at the dollar, I think we are heading towards that high, towards that monthly SIBI right there. That one. I believe we are heading there. So again, be careful on now. That's your drawn liquidity, right? That is your drawn liquidity. And the next thing is, where can we find a discount array that we can trade off of and potentially look for longs? That is your next question that you need to answer. And right here, we have been expanding 1, 2, 3, 3 weeks. So again, don't chase price. So wait for some sort of retracement, maybe into that order block right there. Maybe Monday consolidation. I'm not trading this Monday, by the way. Monday is a bank holiday and there's no news. So it is not a great day to trade. Again, see what Monday does, and then the trend is likely already set. Perfect. So if you can get something like this, then here you want to get in, of course. There you want to get in, and then you want to make money. Thank you, genius. All right. Let me see. Guys, silver bullet is nothing new and never been something like this. It's the second curve. Yeah, exactly. You said it perfectly. Thank you, Max Etienne. And yeah, you said it perfectly. Silver bullet is just it's always been there. Hi guys, I'm studying the ICT mentorship, and so far he just shows example with E-mini index. This strategy is the same for Forex, or he just teaches a better one for Forex. It could also be applied for Forex, so don't worry. It is universal, so it works on stocks, it works on bonds, it works on Forex, on whatever you want it to work on, essentially. Can you please upload video on Silver Bullet? I have a market maker video on Silver Bullet, but it's not only about Silver Bullet, it's also about the market maker model. And the thing is, I will also touch on market maker model and Silver Bullet inside the A to Z guide. So don't worry. I will do that. I've tried them for a few times. SPT. I'm not sure what STP is, bro. Is it another prop firm? Discovered your channel the last 2 weeks and it helped me a lot with. Hey, love to hear it, Dean. Love to hear it. Appreciate you a lot. I have a doubt in flood and lot while taking entry, which we should consider more collide of PD rates. Yes, exactly, CFI. Perfect. You said it perfectly. So you answered your own question basically, right? The price or the place where there's the most overlapping PD rates, that is the perfect place. And again, it will not always come to that place. Sometimes when price is in high momentum, you will just see a sweep into a fair value gap and then boom, trade higher. But again, this is a very easy guideline to follow, right? Because in trading, we need to have some rules. If we don't have any rules around our trading, then we will likely get overwhelmed. We will not, you might notice, you might relate to this as well. Whenever you don't have any rules, your entry pattern, you don't have a certain entry pattern, then when price comes to your PD rate where you want to take a trade, and then you're thinking, oh shit, what do I do next? Where do I get in? What do I do? There's a very, very gap here. There's an order block here. What do I do? And that is, yeah, that's what happens when you don't have a set of rule. Let me see. Hey, love to hear it, Mark. From Syria. Hey, love to hear it. Appreciate you. Please, could you talk about money and risk management? Yeah, for sure. I can touch on it a little bit right here. Your voice is so pleasant. Thank you. Sorry, I got a little bit distracted. It's a it made my day, the compliment. Thank you. Could you talk about money and risk management? So risk management, if you're trying to go for a funded account, and let's say there's a static 10% drawdown. So right here we have 10% drawdown, 5% probably daily drawdown, right? And the thing is, if this is already trailing drawdown, then don't buy the challenge. But you want to have set parameters, especially when you have no time limit. So I would always advise no time limit. Go for a prop firm that doesn't have a time limit, because it's very unrealistic to make 10% in 30 days on a consistent basis. That is just, it's unrealistic, and they want you to fill. Of course, they want you to fill. So right here, go for a no time limit prop firm. Then you need to have set risk parameters. So you need to have, let's say we have a 10K account. When we go below 10K, we want to drop our risk. When we go above 10K, we want to increase our risk again. So whenever we are in drawdown, we need to focus on getting out of drawdown. Getting out of drawdown is not by increasing risk. It is by reducing risk and getting that confidence flow going, get back in the groove. Once you are back above a certain number, so above 10,000, you're back at break even, then you can start risking 1%, for example. And when you are below your break even level, so below 10,000, then you might want to consider 0.5%, and even below, let's say 4%, 4% of your drawdown. So you're now in 4% drawdown, then might even consider 0.25%, and then focus on getting to 2% drawdown maybe, and then use 0.5% again, then focus on getting to 10K, and then when you're in 10K, focus on 1K, and then you want to focus on making profits again. But first, get out of the drawdown. That's very important. So I hope that makes sense, and I'll touch on it in the A to Z guide as well. Don't worry. How do can know the trend is set? Because you'll say I'll no trade Monday until I see how trend is set. Focus on the economic calendar. That will tell you a lot. And how can we know if the trend is set? If we focus on the PD raise, so let's take a look at, well, we can actually take a look at the dollar right here. Monday is consolidation, right? Monday right here was consolidation. Then we had Tuesday right there. It came into a 4-hour, I believe it was a 4-hour. Yeah, the 4-hour high right there. And the daily fair value gap. Then that already is displacing higher. So these two next days are very easy to trade, right? We just essentially have to buy. I hope that makes sense. Love this kind of, do it more, love your vision and voice. Why is everybody complimenting my voice all of a sudden? I appreciate all of you. Thank you. Thank you. Thank you. Appreciate it a lot. Can you make a news video and add it to the A to Z guide? Yeah, I'll potentially look into it. I have currently, we will be going over structure, I believe, in the coming videos. And then slowly we will start adding things, etc. And then at the end, or I believe at the end, we are going to talk about kill zones, etc. and news and all that stuff. How did you use dealing range? Dealing range is a range that took out both sides of the market. So essentially a breaker. So right here, we have a dealing range. We took out buy side liquidity and sell side liquidity. That is a dealing range. So this is your dealing range. Then you wait for it to come into 50%. It could be a strategy on its own, right? Dealing ranges. So it is essentially buy side liquidity and sell side liquidity. That is, if we take both of that, then you have a dealing range to work with. And it's the same right here. Sell side liquidity, buy side liquidity. And then you would wait for a retracement into the 50%, which you don't get here. All right, perfectly fine. And then it continues. Then you have potentially on here, right here, you have a new dealing range to work with. So something that took sell side liquidity and buy side liquidity, or other way around. I'm sorry if I missed some questions. I'm sorry. There's currently a lot of questions, so I'll try to go over everything. The fivers, yeah, the fivers, I've seen them before, yeah. True. Fivers, the only thing I didn't like about fivers is the leverage, I believe. Leverage was kind of on the low side. Would you cover a little bit a valid break of structure? A valid break of structure is, well, you can look at it two ways. Some people see a valid break of structure as already when it breaks the wick. So for example, if we wick above a high here, then some people already see it as a break of structure or market structure shift. Some people like to wait for a body close, and that's a personal preference, or maybe try to gather data on it and try to see what you prefer. Let's see. What do you essentially look out for before taking trade when it gets to your previous PD array? My brain is fried. I almost said previous day array. Great question, Dean. So I look for displacement on both sides of the market whenever we get into a PD array, and then a market structure shift, and then your usual entry. But basically 2022 model, but a little bit more specific. Again, I'm sorry, I have a little bit of an obligation towards my mentorship. I can't just spoil everything. That would not be nice of me. But when you have the 2022 model, wait for a new displacement from that 2022 model, and then you can then I would look for the entry. That's when I would look for the entry. A video about how to find a good trading model. Great, there's a lot of concept, but yeah, understandable. I will try to work on it. No worries. Can you look at UJ daily? We had a fantastic dealing range with daily for value gap as drawn liquidity. Let's see. I actually looked at UCJPY right here. We had we are likely heading towards this daily for value gap, right? That one. And then on the 4 hour, we had pretty nice price action right here in this week. We had this breaker overlapping for value gap. Then we had for value gap right here, first line of defense, order block right there, last line of defense right there. Pretty nice, right? So right here, I would expect higher prices. Be careful, be mindful that we are expanding right now. So maybe wait for a little bit more of a retracement and then get yourself in. Kindly explain the silver bullet with the market maker model. If you search for market maker model on my channel, it is my most popular video on my channel, and that will go over it, but I'll dive more in depth as well on the A to Z guide. How we must cost forward 20, 40, 60 days. I would not even bother, Danny, to be honest. If you don't truly grasp, and again, I don't use a cost forward or cost back or anything, but I wouldn't even bother, to be honest. I just leave it out of the occasion. Don't even bother looking at it, because it's more confusing than beneficial, is what I believe. What color you use on chart? If you go to my Telegram, link is in the description, the free Telegram. Then if you click on the pinned messages, you eventually will arrive at my chart colors. Forecast for, yeah, that's also something you could do. Forecast for it, you could use seasonality, combine it with quarterly shifts, etc. Can you show one trade taken last week? For sure. Where I'll show you a trade I enjoyed the most. I actually took it live on the mentorship, and it was on GBP Australian dollar, I believe. Was it? Yeah, it was. So we are basically heading higher, right? I've talked about this in previous live streams as well. We came into this. Was it GBP Australian dollar? I'm not sure. Yeah, I believe it was. We came into this weekly order block. Yeah. And now expanding higher. Then right here, we are likely heading towards that high and towards even that high potentially. Then on the 4 hour, we had a 4 hour fair value gap right there. So if I remove that one for right now, and again, this is where we have high momentum, and we even had a breaker right there. So right here, we could look for a potential entry inside that. So right here, we had this potential first entry, then targeting the highs. Then afterwards, we had that potential entry right there. Right there. Stop loss right there. Then this was an entry as well. And again, not suffocating the stop loss. So yes, this is live, Nick. Yes. Then again, not suffocating stop loss. So stop loss was, I believe, where did I put stop loss for this one? I don't even remember, to be honest. But I believe it was covering the fair value gap somewhere around there. All right, perfect. And this was the last entry. This was a silver bullet entry, actually. And they don't always play out. Like here, for example, this ended up being a break even right there. This ended up being a break even. So those were some of the entries right there. All right, let me take a look right here. About your voice, yeah. that guy was right. Appreciate it a lot. Are the concepts you apply more aligned to core content or to both? They are both both from 2022, both from core content, if that makes sense. They are very much related to one another. How many pairs you trade with REO? Every pair. Well, I have a filtering process, as I like to call it. And that filtering process leads me to eventually focus on trading one pair. So, hey, Laz, what's up, brother? Great work, bro. Love your stuff, brother. Go check out Laz on Twitter, man. Great guy, and Instagram. Great guy. Great to see you here, brother. Thank you. And so, to answer your question, Ricardo, sorry. Basically, what I do, I have a filtering process. But at the end of the day, when I'm sitting down and I'm trading my session, then I trade only one pair. So I always execute on one pair only. And that is very crucial to understand, because otherwise you will be flicking through pairs, etc. And you might see a lot of pairs here, but when it actually comes down to that day, I only trade one pair. So there's a huge filtering process going beforehand. I can't understand one thing. If prop provides 100k, why should we use leverage? It makes we can risk more, essentially. So because they have leverage, it allows us to risk more and not trade off with 0.01% essentially. If that makes sense. Could you please have a quick look at gold chart and advise your thoughts for the coming week? Yeah, sure, brother. Always. Let's take a look. Let's take a look right here. Oh, this is the 5 minute. I thought I was looking at the weekly for a second. I was like, huh? Oh yeah, I had gold is actually looking very good currently. And we had this breaker right there. I didn't expect a sting into that fair value gap, but of course, the first line of defense is that breaker. So again, when we have that first line of defense in this breaker, in the form of this breaker, or an order block or anything, it might not always get into the fair value gap. Of course, it could be way stronger right there, but it might not always reach into it. So that is something to take into account as well. Now, right here, we were continuing lower. So this is an old line I said on this day before. And right here, we actually have pretty nice price action. So I would look for shorts. And for the coming week, I would say reach into this weekly fair value gap overlapping with that high right there. And then potentially see what it does from there. So right here, at the beginning of the week, if we can get something like this on Monday, that would be absolutely lovely. And then maybe a sting into that fair value gap. Again, all speculation. We need to react and adapt during that time. But I would look for shorts until we reach that weekly fair value gap right there. So let's take a look. Ooh. Do you look for IBDA and CBDR? Yes and no. Everything is incorporated in my plan, but I don't really... it's difficult to explain because inside the mentorship we incorporate everything, but it is not that we pay extra attention to it. that is a bit a bit vague. I'm sorry, but yeah, we do use it, but it's not paying specific attention to it. That makes sense. I'm new. I see. What is PD race, brother? Sorry to make you explain. No worries at all, brother. No worries at all. It is PD race are. I would have to send you to my intro video on the A to Z guide. If you search on YouTube A to Z guide or just my name Aryo and then A to Z guide, then the intro video explains what PD rays, or the order block video, the first video explains what PD rays are. They are just basically, it's a great question actually. They are basically technical levels in price action where price will likely reject off of. So if we are looking for low prices, I don't know if you know what bearish or bullish means. If we're looking for bearish prices, then we are looking for a premium array to reject off of and continue lower. Let me see. What are crosses? Crosses are cross pairs are everything outside of the dollar, of the US dollar. Ooh. What's up? Why are capitals? What's up? Hey, love, bro. Love, brother. Tori, what's up? What's up, Tori? How you been? I know Tori has been killing it. I know it. I've seen Tori killing it. Love it. Thanks. Makes much sense. Do you also consider seasonality and futures market? Thanks. Yeah, I do. Seasonality, it is always a bit of a controversial topic, right? Not as in it's a bad topic or anything, but I hate when people say it. I hate when people say, "Yep, dollar is going higher, seasonality." I'm like, come on. That doesn't make any sense. It is just, yes, it happened in the past, but that doesn't mean it's going to happen this month. It doesn't make sense, in my opinion. So yes, seasonality plays out, but when price action already is playing out, then, for example, dollar in May should be going higher. Yes, we already saw it coming because we took a look at the price action. We didn't need the seasonality to tell us, if that makes sense. And again, if you want to use it, don't let me discourage you. It's a personal issue with me. I have a personal issue with seasonalities. I know which PD rays are interesting, but I have problems confirming my entries on the lower time frame. What's up, Omer? What kind of problems do you have confirming on the lower time frame? Please do analysis of Nasdaq. Let's take a look, my brother. Let's take a look. Oh yeah, we had this. So the thing I don't like about Nasdaq, and the reason I wouldn't personally trade it, is because you're now chasing price right here. And that is not something I like. We are already expanding. So when we are expanding right here, it's just, I don't like it. I feel like I'm either trying to call a top right here, or I'm trying to chase price. And that is when I prefer to trade either ES or the Dow. So ES, we still have a clear drawn liquidity. This high could be the drawn liquidity. And on the Dow, it's also lower. Oh, the Dow is doing absolutely something else. Whoa, indices are decoupled. I haven't taken a look at it actually, but they are decoupled as crazy. All right. So I would prefer trading the Dow or the ES right here because we have more price action to work with. But if it is going higher, to answer your question, of course, sorry. If it is going higher, I would expect it to go higher off of that daily order block. We had this fair value gap as well. Keeping in mind, we do have a weekly fair value gap created right here. And we could, if we take a look at the continuous contract to get a better look, we could navigate. Are we inside that? Ooh, that would be most likely the most short-term, near-term drawn liquidity. Right there, we could see a previous week high sweep, maybe a retracement in the coming weeks as well. Something could happen, right? Thanks so much, Harry. Do you smoke cannabis? I'm not an active smoker of cannabis. No. I have smoked it, but no, I try to stay away from it. When do you accept new students? I really look forward to enter your mentorship. Hey, I have all of your notes printed. Well, all of my notes printed. Damn, that is crazy. I'm accepting new students on The basic is always open, but I think you're speaking about the masterclass. The masterclass is opening up again at the end of June, and then it will close for the summer months, most likely, because we are, at least, we are going to focus on actually live trading then as well. And that is what I've been focusing more on inside the mentorship as well, live trading and live Zooms. Like basically what we're doing right here, but then just Zoom with a small group of people and then just doing some live trading. So it's my first time here. Is your model shows up every day? Sorry, Ricardo. Is your model shows up every day? No, absolutely not. My model doesn't show up every day. I could force something, but don't worry if your model doesn't show up every day. It doesn't have to. Don't worry. The first time here and it's been amazing. Hey, Ricardo, welcome actually. Welcome to the family. Great to have you here. Appreciate you too. On the low time, I'm waiting for a liquidity sweep, then in the market starts to shift, but most of the time it goes in the opposite. Is it maybe because your high time frame is then on the wrong side? Do you feel like you're trying to call a top or a bottom very often? Where do you live? I live in Amsterdam, but but I don't smoke a lot of cannabis. Not everyone in Amsterdam smokes a lot of cannabis. Come on. I had to buy a 3-toner for my printer. My neighbor almost. A 3-toner. Oh man, the thing, bro. The toners for the printers are so expensive. The printers in itself are fine, but everything around it, jeez. I'm not sure if you saw my tweet, but I just wanted to say thank you for all the core concept notes, organized messy notes into a formulated. Hey, brother Nick, appreciate you, brother. I'm going to be honest. I didn't see your tweet. I'm not active on Twitter if I'm not tweeting or anything. So I'm sorry, but I'm great that you told me right now right here. So appreciate that a lot, brother. You're a blessing as well. Don't forget that, my brother. All right, I'm going to end it right here. Again, what are we looking at? Dollar, a high price. But keep in mind, we have been expanding a lot. And hopefully we can do a live stream in the week, but I'm not sure. I'm not going to promise anything right now. But again, all updates are inside the Telegram, inside the free Telegram. So join that free Telegram if you want updates on the live stream throughout the week that are a little bit more spontaneous. So join that. And then I will update you through that. Then I want to thank you all for being here. Love you all. And I'll see you at the next one. And A to Z guide will become very interesting very soon. It is already interesting, but even more interesting. All right, love you all, and I'll see you at the next one. Perfect, thank you.